All right, so this should be live streaming right now, or at least I hope it is. And if anything, I'll do some edits just a little bit later. But I know today I wanted to go over a couple of things specifically. And what I want to go over today, just looking at my notes over here, is I want to go over pitchforks, candlestick patterns, and harmonic patterns. Okay. So a lot of times, especially throughout my years teaching individuals how to trade Forex, how to trade binary options, how to dive in the basics of trading crypto, I will say that most people almost never make it to this point. They just want to learn the super basics and just kind of plug in right into our lives and just kind of play Simon Says as we analyze the markets. And if we identify an opportunity and we, have some commentary on it, people want to jump into trades, but it's a little bit more to it than that. All right. This is truly about learning the skill set of trading. If you want to get real access to some of the stuff, then you have to be willing to go the extra mile to learn and also apply several things here, so you are okay. You are good to go. Let me make sure that there's no echo over here. I think we're good. I think we're good for the most part. Let's see. Okay, hopefully some of y'all heard that. But yeah, let me just actually start over here. So definitely take notes, y'all, because this is going to be, a little bit more advanced than what you're normally used to. And please feel free to rewatch, review, and relearn some of the things that we're going to go over. Now, even though we're going to be covering some advanced drawing tools and talking about candlestick patterns and talking about harmonic patterns, understand that each of these things that I'm touching on, we could have a whole entire masterclass on each of these things. But my goal in this lesson is really to touch on the surface of it instead of doing an enormous deep dive. Now, I am going to go a little deeper than the surface, but I'm not going to go all the way in. Believe me, if you've been to some of the places I've been in where, we hear experts talking about one particular indicator, it can literally take 5 hours for one indicator, a couple hours for a simple drawing tool. So I don't want to drag your time. I value your time. I respect your time. I appreciate your time. So with that said, we're going to keep this as simple as we can keep it, as simplified as we can keep it, and we'll just go from there. All right. So there's a couple of things that I could use, especially when it comes to showing you the visuals behind what I'm going to go over. So it's going to be a mixture of a couple of different things. I'll show you some of the graphics that I've made, that I've put together, but I'm also going to go into the charts and show you how we can identify some of the stuff. There are some updates with TradingView that really make life so much more easier for individuals that are analyzing markets. I mean, seriously, at this point, technology is becoming so much more convenient on every possible level that if you are failing behind on your goals, especially when it comes to trading, digital entrepreneurship, all that good stuff, it is because you are lazy. The resources are there, the tools are there, but you have to really take advantage of some of the stuff because it really is powerful. So let's go on over to TradingView. TradingView, as you already know, has a lot of really, really, great resources for your education, for you to learn, so on and so forth. So what I'm going to do is I'm going to strip a lot of this stuff back, which, I went over yesterday. So let's remove all indicators. Let's remove all drawing tools. And we will start from scratch. We are looking at Euro USD. Okay, right now. And at this point, you already went through SRTs, support resistance trend lines. We talked about contraction, expansion, fundamental analysis. We spoke about drawing tools, the simplified drawing tools. We went a little bit more into the advanced drawing tools as well, to include Fibonacci's, Ganfans, Elliott waves. Today we are covering Pitchforks, because I know I briefly touched on it, like not in the last stream, but stream before that. I briefly touched on Pitchfork, but I want to kind of go a little more deeper, right? With Pitchforks, but not too deep. We'll still keep it basic. Candlestick patterns and harmonic patterns. And you're going to see as time goes along, you're going to be revealed to different tools that are going to highlight some of this stuff for you, so you don't have to actually do it yourself. Okay, so we're looking at the 15-minute chart right now. Let's go on ahead and let's go and click on the 1 hour chart. As you already know, the higher time frame, the stronger the confirmations, and it's for multiple things: indicators, candlestick patterns, drawing tools, etc. Higher the time frame, stronger the confirmations. Visually, with your eyes, you'll be able to see a couple of things as you get more experience, and as you get more familiar with using different tools. You can literally scan the market with your eyes and be like, okay, yeah, I see what's going on over here. All right, let's take it. But everyone in the beginning, you're gonna have to visualize. You're gonna need the visualization. At first, so you can familiarize yourself with some of the stuff that we are going to go over. So let's go into my downloads real quick. Do I already have this pulled up? Let me see. Okay. All right. So, we're going to go to the downloads real quick. So you're going to see this thumbnail pop up. Okay. And, all right. We are talking about a few things here. Let's first start off with the Andrews Pitchfork. Okay. Andrews Pitchfork, which is the original Pitchfork. Okay. One of his students, Schiff, ended up creating his own version of Andrews Pitchfork. And so we'll briefly touch on that like a couple of moments after this, right? But for the most part, here's a quick glance at it, and I'll give you guys, some of these visuals that you could download. But bottom line, all right, the Pitchfork consists of 3 trend lines running parallel to each other to determine entry and exit points during trending conditions. As you can see, it has the upper median line, lower median line. Here's the median line, okay? And then you have the upper warning line and the lower warning line, right? There are some individuals that give it different terminologies, but the method is the same, okay? The terminology may be different depending on who you're learning from, but the methodology is just a little different. And so here we go, okay? As you can see over here, let's pulling this up. Andrews Pitchfork. Follow along, all right, as we do this. I don't really need the whole screen over here. I'll take some of it. Okay. Okay. All right. So just to keep it, real simple. All right. Pitchforks are great to use, especially during trending conditions. I know I briefly touched on it before, but now I'm just going to kind of go just a little bit more into it. Again, I don't want to go too deep into the stuff. This could take hours. So we're going to keep it real simple and real brief. We are looking at this chart on the 1 hour. We see a downtrend over here. We see an uptrend over here. Euro USD is definitely on the move. All right, it's not flat, right? So let's do this. Okay, we're gonna go into some of these different tools. Covered Elliott waves already. Okay, so as you can see, different versions of the pitchforks. You have the regular pitchfork, you have the shift pitchfork, modified shift pitchfork, and inside pitchfork. We're not really going to go over these two over here, but these two are the most used. Actually, believe it or not, even though Andrew was the creator of the student shift pitchfork, more people use that. It's a little flatter, but anyway, let's cover ground over here with the regular standard pitchfork. So when we're looking at the pitchfork over here, what we're looking for is a median point, basically a high and a low, for the upper line and the median line, so on and so forth, right? And you can kind of see that there's some parallels over here. You can see that. All right, here, this looks like a good 50% point right over here, literally. So we can start over here. Hit the high. Hit the low. And there we go. We could start at this point over here. If we wanted to really take in the median line, then what we could do is this. We could start off with a typical trend line and kind of cut into the median point or the 50% mark that you can visually see with your eyes. All right, what angle is this? Should be 45. Typical degree trend angle. You can use this tool. Yeah, look at this. 45 degrees. Boom. How about that? A little more degrees is more of a sharper thing. But as we cut right through the middle going up, you see there's the 45 degree line. And if we follow that with the pitchfork, okay, use this as median point right over here. All right. And then we're going to cover that high and then the low because we are looking at an uptrend. So here's a high and here's a low. Okay. Boom. All right. Now you can see over here the warning line, the upper and the lower warning line, the low median line, the upper median line. What I did was I adjusted this tool. Okay. I went into the settings and I changed some of the colors on it so it could look a little bit more color coordinated. All right. So here's the area that I believe is basically the main channel. And right over here, we get to the upper warning line, upper median line. This is going to be kind of a resistance area for me. And this right here is going to be a support zone for me, right, on the way up. And as you can see, it's sticking true to it. Now, there's been some times where it'll break out of it, right, which signifies that this thing is most likely going to get out of here. And look, it has. So the median line has definitely been acting, pretty good as a median line. All right. Sometimes it'll get out of it, but it's getting right back into it. And as you can see, this is pretty strong. Now, you could use this for, several different things. Okay. You can use the lower median line as your points for a buy. And you can use the upper median line as your points for a take profit. Stop loss could be the warning line right over here. Now, obviously, if we are moving up, okay, we are going in an upward direction. The this focus should be on buying as the market is moving up, literally going with the flow. Go with the flow. The trend is your friend until it bends. The trend bended over here for a minute, all right, but look what it did, okay? So you could use the lower median line as your points for as your points for buy, okay? You don't want to use the upper median line as a point for buy because it's kind of, a little late to the trend, but you could even use the median line as, a potential entry 1 and lower median line as potential entry 2, stop loss, all right? Depending on where you're entering, you could use some of these lines as your take profit 1, take profit 2, all right? But for the most part, so you see 45-degree angle, this is how you can utilize the pitchfork when the market is trending. And again, I'm using a 1 hour time frame, but you could use it on the 30 minutes. You could use it on the 1 hour, 4 hour, weekly, daily, so on and so forth. Can you use this on the lower time frames? Yes, you can. Of course you can. But just keep in mind what's going on with the bigger picture as well. So you can use pitchforks. It doesn't matter what the time frame is, but understand that it is a drawing tool that you're going to want to use, okay, when the market is experiencing momentum or when the market is experiencing trending conditions. I'm really putting y'all on game because when you see what's going on over here and you can identify certain points, certain interest points, right? You could take advantage of some of these opportunities that the market is showing us literally every single day. It's New York session. It's a little later in the day. It's kind of the midpoint of a New York session. But for the most part, there are some incredible opportunities that you can still take advantage of in the market. And if you do your traditional SRTs, then you can see it with your eyes. This is a resistance. This is support. But, it's a little more to it than that. You can be good with the basics, but when you understand how to utilize these tools, it's just a little different. Now, okay, let us use this on a downtrending example. We can use it right next to it, but I don't want my chart to look too busy. Okay, you know what I'll do? This is what I'll do, right? Because I'm just thinking in terms of keeping it simple, okay? So what I'm going to do, all right, this is the Andrews Pitchfork, okay? Andrews Pitchfork. Remember, all of you have access to an AI. It's called Gemini, gemini.google.com. All right, you can access that AI for free. All right, and basically you can ask it, all right, the origins of Andrews Pitchfork, and you'll get the full name of Mr. Andrews or Dr. Andrews, and also his student, his successor that ended up creating the Shift Pitchfork, right? But here we go, because I'm showing you this stuff because I want you to start using the tools of today, right? The technology of today. Give me a background on the Andrews Pitchfork. All right, there we go. And so we can read this whole thing together or whatever. Let me see. If it's short, then I'll read it. But if not, all right, cool. It's pretty short and sweet. All right. So the Andrews Pitchfork is a technical analysis tool used in financial markets to identify trends, potential support and resistance levels, and possible breakout or breakdown points, okay? So breakouts, basically the upper warning line, the lower warning line is basically going to be your breakout walls, all right? If the market breaks above the upper warning line or below the lower warning line, then that's a breakout, right? We already see it with the example that look right here. We see it with this example, right? The market broke out to the upside over here. It didn't break out to the downside, which is good because if we're entering, buys right here at the lower median line, then that's actually a pretty good thing. But let's continue. Okay, so it consists of 3 parallel trend lines drawn on the chart, as I have over here in my visual that, you'll be able to, take home with you, be able to download. Okay, it consists of 3 parallel trend lines drawn on the chart, resembling the shape of a pitchfork. Here's the breakdown of the Andrews pitchfork. Origin, developed by Alan Andrews, a renowned technical analyst. Construction, 3 trend lines are drawn based on key price points on the chart. These points typically represent significant highs and lows. All right, so first, during the uptrend, if we're using Andrews pitchfork, we're gonna hit the top. All right, we're gonna hit the top and the bottom. All right, we're gonna hit the high and the low. All right, and we're gonna see how the market moves on the way up along with the pitchfork lines. Okay, origin, developed by Alan Andrews, a renowned technical analyst. Okay, construction, 3 trend lines are drawn based on 3 key price points on a chart. These points typically represent significant highs and lows. Functionality, the center line represents the overall trend direction. Okay, so remember, we just kind of cut through. We didn't use it as a typical trend line, which we would, basically use in the case of an uptrend, we would use the trend line and connect the bottoms on the way up, as far as the candles and the wicks or whatever. We're basically connecting the higher lows together on the way up. Right, we drawing the line in the bottom of that. But in this case, as you saw, we just took a trend line and just kind of drove right through the 50% mark, which happens to be a 45-degree angle, right? 50%, 45 degrees, all right? 2 separate kinds of measurements, but 45 degrees is a typical trend line. And we just cut through the median point of that to then follow up on it with the Andrews pitchfork. Okay, so functionality, the center line represents the overall trend direction. The upper and lower trend lines act as potential support and resistance zones, as I showed you, with the price expected to stay within the channel formed by the pitchfork. Breakouts above the upper trend or breakdowns below the lower trend line can signal potential trend reversals. Additional elements like trigger lines drawn from the first point can further refine entry and exit signals for trades. Applications, identifying trends. The pitchfork helps visualize the prevailing trend and its strength, support and resistance zones. The trend lines provide areas where the price might find buyers or sellers, influencing future price movements. Breakouts and breakdowns. Breakouts from the pitchfork channel can signal potential trend changes, offering trade opportunities. Now, here are the limitations. Remember, no indicator, no drawing tool is 100% of the time. Okay, so limitations, subjectivity. Drawing the pitchfork relies on selecting the 3 key points, which can be subjective depending on the analyst. Confirmation needed. Breakouts and breakdowns should ideally be confirmed by other technical indicators for stronger signals. As we mentioned before, when you use a combination of drawing tools and use a combination of drawing tools and also indicators, right? That's gonna raise the probability of the direction as to where the market may take you. But nothing is 100% guaranteed, right? Because then that wouldn't be calculated risk. Okay, that would be a guaranteed risk, which is, illegal, right? Inside traders, if you have a source where you're conducting inside trading, that's considered illegal. You are cheating the system, unless, of course, you are a politician and you have the green light. You can legally do that. That's exactly why Nancy Pelosi is the greatest trader on earth. Man, her net worth is out of here. You can look it up yourself. Okay, so overall, the Andrews Pitchfork is a valuable tool for traders looking to understand trends, identify potential support and resistance, and gauge possible trend reversals. However, it's important to remember it's one piece of the puzzle, and using it in conjunction with other technical analysis techniques can lead to more informed trading decisions. So case in point, Andrews Pitchfork is amazing to use for trend lines It identified potential support resistance zones. It does have the upper and the lower warning lines, which will detect breakouts, potential breakouts. And it will also detect if there's going to be a market reversal. So this is why it was amazing. This example was amazing because we don't see the market, knocking on the door of the lower warning line to detect a market reversal at this point. This is actually a really good example that we picked out right over here for Andrew's Pitchfork on the uptrend. And now what I'm going to do over here, because there is a functionality where we right click it and we go into the drop down over here, we can switch the pitchfork right here by right clicking. So we don't have to go to the drawing tools on the left side. We can actually just switch it. So when we switch it from the original to the shift, okay, look, check this out. All right, you're going to see that this starts at a completely different point. If anything, this looks like it's reversed. So let's do it manually. Because the origin point is a little different. So let me just X that out right there, okay? All right, so I'm using the trend angle line over here. Boom, perfect. All right, so we're going to have to do it manually because you saw how that went. Okay, let's go into Shift's Pitchfork, okay? So with Shift's Pitchfork, it is a little different. Okay, let's go into files over here, and now we're going to talk about Shift's Pitchforks, or his pitchfork, right? Okay, and over here, let's use Gemini to give you some insight on who Shift was and how he came up with his version of Andrew's Pitchfork. Give me a background on Shift's Pitchfork and the origin of it, and compare it to Andrew's Pitchfork. All right, so you could order, yeah, of course, and just as well steps to yes. All right. No, not bro. All right, so so the AI thought I entered Shift. Right, but no, it's Shift's Pitchfork, right, which is the successor's last name, right? Okay, so the thing with these AIs is that they remember the conversation, and it continues to learn. It remembers your conversation with them. So that, you're right. See, there's a reaction. There's indeed a variant of the Andrews Pitchfork called the Schiff Pitchfork, named after John Henry Schiff, a student of Alan Andrews, the creator of the original Pitchfork. Here's a breakdown of both and how they compare. Similarities. Function. Both are technical analysis tools used to identify trends, potential support and resistance levels, possible breakout or breakdown points. Structure. Both consist of 3 parallel trend lines drawn on the chart resembling a pitchfork. Functionality. Both utilize the center line for trend direction and the upper and lower lines for potential support and resistance. Breakouts from the channel can signal trend reversals. Differences. All right, here we go. Here's the differences. Origin. Andrews Pitchfork, developed by Alan Andrews. Schiff's Pitchfork, developed by John Henry Schiff, based on Andrews' work. Construction. Andrews Pitchfork, the median line is typically drawn between 2 significant highs and lows. Now, when it comes to the Schiff Pitchfork, the median line is drawn at the midpoint between the vertical and horizontal differences of the first 2 chosen points, high and low. This often creates a flatter median line compared to Andrew's Pitchfork. Additional lines. Some variations of the Schiff Pitchfork incorporate additional lines placed a specific standard deviation. All right, so if you're familiar with Bollinger Bands, well, we get into indicators after this lesson today. based on standard deviation away from the median line. Andrew's pitchfork typically doesn't include these. Okay, so choosing between them. Andrew's pitchfork, generally considered the standard, might be easier for beginners due to its simpler construction. Shift pitchfork. The flatter median line can be useful for identifying potential support and resistance during trend corrections where price might fluctuate within a narrower range. Okay, ultimately, both tools can be valuable depending on your trading style and the specific market conditions you're analyzing. Some traders might even use both in conjunction for a more comprehensive analysis. All right, so let's switch it up over here. Let's go right into, all right, Shift's pitchfork. Oh, I'm bugging. Hold on, guys. 1 second. Let's do this again. Okay. Remember, got to hit the high, then the low. That was actually pretty on point, right? When we switched it up, look. So because of the flatness of the shift, pitchfork, you see that it was detecting something completely different. All right, let's try using it on, we can use it right here. This is cool. Seems like a fair 50% point, right? Right over here on this up move. I could use just a trend angle. All right. 46 degrees. Okay. Is it the high before? First high before and then the lower one. For the shift. Oh no, it's the same. All right, so here is the first high. Here is that. Okay, so as you can see, the shift pitchfork is narrower. Okay, it is narrower. Let me just erase some of the stuff so my chart isn't too busy. Okay. All right, so it's much narrower as you can see, but the concept is still the same. All right, where you have your upper median line, your lower median line, and then you have your upper warning line and your lower warning line. So it's a little more narrower. And when the market is going through a correction, it is pretty useful to use. And as you can see, it's on point right over here. Okay. If look what happens when it gets to this lower line, breakout. When it gets to this higher line, breakout. So could have been a buy right over here. Could have been a sell right under here, and they would have been actually significant. So we would have detected that, okay, from this point to this point. All right, solid 66 pips. If we got in on a sell right here, break out to the south, right to this low, okay, that's 127 pips. All right, so pretty significant. Okay, this actually detected the breakout to the south much faster. Right, this gives it a little bit more grace. The Andrews pitchfork, it's a little more lenient, still effective, still very effective. As you can see, this was pretty on point. All right. If you look at this, Pitchfork has a straight handle, whereas the shift Pitchfork has kind of flat to the floor kind of angle. So shift Pitchfork is flatter than the original, and there's modifications of the shift Pitchfork as well. So you can use this in downtrend, you can use this in an uptrend, and you'll be good to go. Let's use the shift Pitchfork again. This is pretty sharp. Actually, let's follow it up. The trend angle over here is going to be crazy sharp. But let's use that medium point. All right, so we got to hit the low. Boom. Hit the little high. It was over here. Yeah, and this thing was breaking from the very start. All right. Wait, actually, I missed it. Hold on. Let me show you where I went wrong over here. All right, let's go a little closer. We got to dig in just a little bit more. Let me fix this up. It's true 50% point right over here. Look, 45 degree. All right. Okay, so there was a point that I did miss. This is it didn't go lower than this. So once we get it from here, boom, here's check the low first and then the high because it is a downtrend. This was the high point. Right over here. Sheesh. Yeah, this thing is so narrow. But look, it's pretty good though, because look how this just slams down. And let's say if you would have missed this sell over here and you detect that, yo, this is going to go down on a downtrend, and this just continued to go down, you could have placed the sell right over here. It was breaking out south even more. And you would have carried that trade right on over. It would have been a great second entry. First best entry for the sell on the shift Pitchfork on the way down. Obviously, upper warning line and the upper median line would be great sell points. But if you missed it, you want to catch that breakout to the south, that would have been a great opportunity right there too to capture. So bottom line is shift Pitchforks are much more narrower, and I like it because basically what we can see over here, right, so far is that the Andrews Pitchfork is a little more lenient. I believe it's great for longer term trends, whereas the shift Pitchfork, it'll quickly detect a breakout spot, which I like. Andrews Pitchfork, I could use it. Just take some more conservative trades during a trending position. But the shift Pitchfork is very narrow and it's pretty on point with detecting some of the stuff. You can use it for the same kind of functionalities. I would use this for 1 hour. I think would be perfect. 30 minutes, 1 hour, I think would be great for shift Pitchforks. Traditional Pitchforks, I could, have it pretty uniformly all the time frames, but, really for a narrower, more aggressive approach to finding excellent entry points, shift Pitchforks is pretty useful. And it's no wonder why more people who are experienced traders use shift Pitchforks more than they do the Andrew ones, okay? So you can look that up if you want. But yeah, pretty on point. Okay, so all right, we covered Pitchforks. We covered Andrews Pitchfork. We covered shifts Pitchforks. All right. Next up is we are going to cover candlestick patterns. Okay. Now, let's go on to my visuals over here. I'm gonna place it right over here, y'all, because I want this to be as easy for you guys to look at as possible. So now that we covered, pitchforks, all right, I'm going to move to another part of the chart, and I'll keep that there for snapshot purposes and whatnot, because I'm putting together kind of like an ebook for the squad, for the squad over here. Putting an ebook together. All right. Okay, we're pretty good with this. All right. So candlestick patterns. I'm gonna actually go to a lower time frame. Let's go on over to the 15-minute time frame. And let's get out of here for a second, away from the pitchforks. And I'm gonna expand this just a little bit more so we can identify certain candle patterns and whatnot. All right. So as you can see over here, there are 3 types of different candlestick patterns. You have your bullish, your neutral, and your bearish. And I know some of you probably, as far as visuals concerned, maybe, you're squinting right now, but no worries. I have a little magnifier over here, okay? So bullish, okay, neutral, and bearish. Bullish candlestick patterns are candlestick patterns that are forming themselves, and it is basically indicating that the market may be going up. Neutral is basically like, hey, if the market was just trending and now it's starting to show signs of slowing down and it's about to start getting into that contraction stage where the market is finding balance, right? Where the market is just consolidating, okay? You're going to see some neutral patterns appear before the consolidation starts. Bearish candlestick patterns are basically the exact opposite of the bullish ones. And they are going to basically indicate that the market is moving south. Okay? So whether, the market was bullish for a while and then it went neutral, now you're starting to see some signs like, hey, the market is about to go down. All right? So a couple of ones over here. They're all pretty standard. But for the most part, let's talk about it, okay? Bullish. This is the hammer. So basically, candles, bearish candles, they get to a point and then boom, this hammer appears. So long wick, square at the head, all right, square body, square candle body, long wick at the bottom, all right? This is the hammer, okay? This is indicating price moving down. This hammer appeared, price may be going up. When this appears, all right, this is showing us that this is a bullish hammer. The market may be going up at this point. The inverted hammer, okay, market moving south, okay, here's the exact opposite, right? Here's the inverted hammer, and now this is going to start going up. Dragonfly doji. All right. So flat candle body, long wick at the bottom for the dragonfly doji. When you see this, all right, market coming down, and you see this dragonfly doji, okay, this is indication market may be going up. Bullish spinning top. So this is when you'll see a square candle body right at the middle, long wick up, long wick down. All right, bullish spinning top. Okay, it could be the market was consolidating for a little bit, showed this, or the market was coming from a downtrend, showed this a little bit, but is showing signs that the market may be going up right there. Okay, this is single candle patterns, bullish. Okay, And what I'm going to do is I'm going to go through this illustration, but I'm going to show you how you can identify it using a tool that's available for every TradingView user right now, okay? And it's one of the public ones now, which is really good because, you know, they continue to update, and I love that. All right, now we're going to stick to the bullish candle patterns, double candle patterns, okay? Here's the bullish kicker right over here. All right, think of a field goal punt, right? Bullish engulfing. All right, so this is when we see bearish candle, close over here. Next one opens up, and it's pretty significant. So this is showing signs like, hey, there's some strong bullish movement. It's basically double the size of the candle before, which was a bearish candle. This is a strong indication market may be going up. Piercing line, okay? We see this form appear. Market coming down, no body. All right, look at this. Comes down over here, hangs a little bit. All right, starts coming up, no body. So this is showing that the market is pressing the brakes. Maybe the market was coming down, and now the market is pumping brakes before it starts changing the direction to the upside. The bullish Harmonic, all right? Here we go. Bearish candle, all the way down. Bullish Harmonic, all right? This bullish candle over here, it's about 80% of that size, but definitely showing a strong indication. Well, actually like a medium indication. Market may be going up. Tweezer bottom. Bearish candle here. All right. Next candle. Closing a little bit above that. Showing signs that this may be going up. So that's kind of mid. Triple candle patterns. This is what a lot of people look for. A lot of indicators look for this too. Morning doji star. Okay, so look, check this out. All right, here's the bearish candle. And then here is a doji where the wicks on the top and the bottom is pretty small, right? And it's followed by a bullish candle. This is a morning doji star. 3 white soldiers. So 3 back-to-back strong bullish candles. Bullish engulfing sandwich. Bullish candle, market went up, then the market went down, and then the market went up again with these 2 other candles, okay? So bullish engulfing sandwich. All right, so this bearish candle just got sandwiched, and the next one, the confirmation candle, went up. Bullish abandoned baby. I know a lot of these names are kind of, you know, interesting, but basically in this case, you'll see this, you see that gap right here. Look at this bearish candle, okay? Here's a gap, and here is the baby all alone, right? Followed by a bullish candle, all right? Again, these are signs that the market was going probably in a downward direction and is pumping the brakes, right? And then you'll start to see some of these patterns appear. Morning star. All right, and feel free to rewatch, review, relearn, y'all, because I'm going to show you how you can identify this right here in the charts after we get through this, okay? So, morning star, okay? Bearish candle, all right? Very similar to the abandoned baby. Bearish candle, all right? And here's a gap, okay? But this bullish candle following this abandoned candle over here is actually, it's not a gap. See over here, when you look at the bullish abandoned baby, it's a gap, bearish candle, gap, all right? Small candle body over here, another gap right here, and then it's bullish. This is a little different. So here's a gap, all right? But the bullish candle that's following the abandoned baby over here is actually not gapping, all right? There's no gap over here. And what this did, this just closed that gap, if anything. Rising 3, okay? Here's an example of that. Bullish candle, 3 small bearish candles, bullish candle again, all right? Signs that the market is pumping brakes or continuation. So in this case, if you look at this, I would say this one is a continuation because market was moving up, all right? And here, you know, every in every trend, okay, you have these pullbacks. So look, you look at these two bullish candles, all right, and here's a 3-candle pullback, a small pullback, a small 3-candle pullback, and here's the continuation of that, all right? So there you go with these bullish candlestick patterns. I'm going to show you how we can identify them. We can do it manually, but there's a functionality here that everyone can use that you can actually use it to identify candlestick patterns for you, making your analysis so much more easier. All right. I'm going to go from bullish to bearish, and then we'll talk about neutral, okay? Yeah, because we're talking about bullish, up direction. Let's do the down direction. It's basically the exact opposite, right? Just to make the explanation like real simple. Okay, so hanging man is the exact opposite of the hammer. All right, so if let's just say, all right, that we saw the hammer on USD JPY. If we were looking at the chart reversed, so instead of looking at USD JPY, we looked into JPY USD, which is not normal by any means, but there are some brokers that will allow you to see currency pairs inverted. Okay, so for example, if we saw a hammer on USD JPY, but then we inverted the pair, it would be a hanging man. Does that make sense? So the patterns that we see over here on the bullish are basically the same but exact opposite on the bearish. It is called different names. So the hammer, okay, exact opposite of hammer is the hanging man. All right, so basically it is a hammer, all right? It is a hammer after a bullish move in the market. So 3 bullish candles, right? Here's the hammer that appears, and boom, followed by 3 bearish candles, okay? Shooting star. All right, look at this. This is basically an inverted hammer, all right? You see over here, okay? So shooting star is the inverted hammer, but opposite. So whenever you see these familiar pattern candles appear, you already know what time it is. All you have to do to decipher what to do is identify the market is to identify the direction that the market was going in. When you see the hammers start to appear, the hanging man, the spinning tops, all that good stuff, then you already know what time it is. A reversal is most likely going to happen, right? So the bullish, bearish, I mean, they're showing you reversals. Gravestone doji, all right? So let's look at this. Gravestone doji has a small body at the bottom, long wick at the top. So look, market comes up, all right? Boom, it tried to go up. It actually didn't close there, and it closed right where it opened at. There's a gravestone doji. That's like, nah, bro, you're not gonna continue to, you are not gonna continue to, get higher than this, right? And then it starts going the opposite way. It starts going a bearish direction, bearish spinning top. Okay, you see over here, bearish spinning top, double candle patterns. All right, here's the bearish engulfing. All right, opposite of bullish engulfing. Okay, here's the bearish engulfing. So the market went up, all right, stopped, and then look, market started higher than where the last candle closed, even though it was a bullish candle. It started working its way down. That's bearish engulfing, bearish kicker. Okay, look at this, bullish candle, and then a gap, and then look at this. Market started going down. There's a bearish candle right over here. There's a bearish kicker. So think of it as like as a kickoff, right? If you look at football, right, look at it as a punt or a kickoff. Dark cloud cover. All right. So if you look at this is the exact opposite of the piercing line right over here. All right. So exact opposite. There was no price right over here. It was just a straight up wick, bullish candle. Look where the bearish candle started. All right, followed by another wick, no candle body. All right, again, this is pumping the brakes. This is basically the market going up. All right, it doesn't know what to do. All right, this damn near doji, it just doesn't have a body. And then it starts going the opposite way. Bearish Harami. All right, basically the exact opposite of the bullish Harami. If we look at this, bearish Harami, bullish candle, come up, right? Look, here's a small bearish candle right over here. A little bit of a gap there. Look at this right here. Tweezer top, exact opposite of the tweezer bottom. All right, so I know this may be overwhelming for some of you, but don't worry. So I'm going to show you how you could identify it in the market, and you can use this as a reference point, all right? Okay, triple candle patterns, all right? The falling three, all right? If you see, the falling three is the exact opposite of the rising three. So the falling three is basically market moving down. All right, here's a small 3-candle pullback and continuation of the bearish direction. Bullish engulfing sandwich. All right. Basically, a bullish candle is trapped between two bearish ones, and the final confirmation candle, all right, just blew past that one, basically stating like, hey, this is going down. 3 black crows, okay, is different from 3 white soldiers. All right. Basically, 3 bearish candles, typically the same exact size. This is showing you that there's definitely momentum going to the downside. Evening doji star, all right, different than the morning doji star, which is over here. And basically, here's a bullish candle. Here's a doji, right, that appears, followed by a bearish candle going in the bearish direction. Bearish abandoned baby, okay, bullish candle. Here's the abandoned candle, all right. Notice the gap, okay? Another gap before the continuation of the downside. All right, so this is the abandoned candle, abandoned baby right here. Evening star, okay? Market goes up. Here's a gap. All right, this is similar to an abandoned baby, but there is no gap when it continues. It actually, it's consistent. All right, it goes down together. So it doesn't happen too fast to where there's a gap. All right, so this is an evening star. Okay, and those are the bearish candle patterns, which is the exact opposite of the bullish candle patterns. So start getting familiar yourself with this, and I'm gonna tell you how you can simplify this in your brain, but also how you can, identify it on the charts. All right, so neutral. So again, same kind of stuff, y'all. Spinning top. This is neither a bearish or a bullish spinning top. This is a spinning top. So this is what you have to look for. This is what I want you to pay attention to. Look for the spinning tops. Look for the dojis, okay? Gravestone doji, dragonfly doji is when the flat body is at the top, right? And this is a typical doji. So if it's a cross or a dragonfly doji or gravestone doji, signs of reversals is coming up. Spinning top, sign of reversal. All right. The Marubozu. All right. This is the exact no wick in these two candles. All right. Is basically the same exact candle body size. No wick. Definitely showing you that the market is pumping the brakes. Even if the market is consolidating. Okay. So these are the only 4 things that you got to look for. Really is these 3 things. Really. If you see the 3 white soldiers, buy. If you see the 3 black crows, sell. You see that happening. When you see the rising 3, that's a pullback. When you see the falling 3 right over here, that's just a pullback, before continuation. Okay, but definitely take a look at the spinning top. Look for spinning tops. Look for dojis. You'll be good on that. Everything else, you can have the scanner over here identified. Now we could go to each candle, and we could see if we could identify any of these candlestick patterns that appear. But the trick is that you got to move through the different time frames in order to catch them. right? What you can do though, and let me show you what you can do. You could go over here to indicators, all right? And this is why my next lesson tomorrow is gonna be the beginning of indicators. So this is gonna be the bridge for that. Since we've been talking about drawing tools and candlesticks patterns, all that good stuff. But yeah, when we go over here to the technicals, I'm bugging. Hold on 1 second. It is. Let's see. Look, they even have one for gaps, which is, this is for everybody. All right, the technicals over here. This is for everybody. All right. Where is? Do I have to log in from somewhere else? And I had it too. It's supposed to just appear. Let me refresh my screen real quick. Because they have a candlestick. They have a candlestick pattern recognizer. But I don't want to go through the community for that, right? I don't want to go through the community for that because, you know, a lot of these individuals can create indicators and put it on TradingView, but it's TradingView themselves that actually have it available for the standard user. Okay. All right, so candlestick patterns, go over technicals, go to patterns, go over here to candlestick patterns. Let's click on this. Okay. And there we go. So yeah, that's what I was looking for. But it was a different page that I saw it in. But anyway, that's how you can access it. But whenever you use that, you can click on this to find out which one it is. Okay, this is a bearish engulfing, CBE. Okay, so you're gonna see a description right over here. See that? Engulfing. At the end of a given uptrend, a reversal pattern will most likely appear, blah, 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 right? Right over here. A hammer. Here's a hammer. All right, let's look closely into it so you can see for yourself. All right, see that? This is the hammer. All right, and here's an explanation of the hammer. So you see that it's blue. All right, this is a bullish hammer. Okay, bearish engulfing. Okay, basically getting jumped by two bullish. Right over here. Now, this is basically an indicator. Again, indicators could be wrong. So you have to basically utilize this, but also be on the lookout for potential errors. All right, let's bring it to the 1 hour. And let's make the screen bigger. All right, you see this? D, most likely that's a doji. Yep, doji. And a small explanation. All right, so let's zoom into it so you can see why I detected it. See, it's a cross. All right. So you have different types of dojis. Here's another doji that appeared. Another doji that appeared. Here's a bearish engulfing right over here. Or bullish engulfing. Sorry, you see it's blue. Okay. Which is a good sign, you know, especially if you're using a pitchfork, because this is the breakout point right over here. So if you enter a buy, you get away with a quick come up. Let's measure from here to here. It's a quick 25 pips right there. Nothing crazy. Doji. All right. Right here, bearish engulfing, which I don't detect that as a bearish engulfing. Another doji right over here. But yeah, you could you can utilize this, all right, to identify different candlestick patterns. And as you can see, the most common ones that appear are dojis and engulfing ones. All right. Which is cool. This is great. This is great. But now let's talk about the final thing that I wanted to go over today. And that is harmonic patterns, which is still candlestick patterns. Okay, so this is basically just a continuation of candlestick patterns. And I'm going to show you the tool that I use to identify harmonic patterns as well. But let's talk about the traditional harmonic patterns. So you see over here, we go over to Harmonic Scanner, harmonicscanner.ai. Okay, harmonicscanner.ai. You'll see some of these harmonic patterns appear, which it basically is candlestick patterns. Now, this system that I use also identifies traditional candlestick patterns that are not harmonic patterns. So, for example, this detects a double stop right over here. So let me take out some of these double top, double bottom. Let me take out some of these harmonic patterns. See double bottom and double top, okay? So a double bottom, all right? Here's double bottom. Think of it as like a W, okay? So right over here, what it is showing, all right, is that the market, it came to a stop, all right? Came down, boom, bounced up from here, hit a point, bounced over here again, and it's showing signs that it's going to continue to go up, all right? So when you see that, you can also have it show you, all right, it's a double bottom, okay, think of a W. You can have it show you potential entry, stop loss, take profit. Because when these types of patterns appear, what you're going to see is this, right? Market was coming down, boom, bounced, went up, bounced here again, and now it's going to continue to go up. Once it forms that full double bottom, all right, then what it's gonna tell you is that it's going to continue going to the upside, and it did. Eventually, it did. Without the boundaries of time, this thing went, extremely high. All right, went from this point all the way to this point in a period of 43 hours, in a period of almost, actually 3 days and 19 hours, almost 4 days. All right, in this example, it went extremely high. All right. Okay. Now, show that double bottom again. Think of a W. Double top is the opposite of that. Double top, think of it as M. All right. So market is now coming up very strongly. Hit this resistance. Came down. Came back up. If it hit the same level or similar to the same level, it still forms an M. All right, but you see over here, it's more than the halfway point, and then look, started coming down. All right, so once that M forms, all right, here's a continuation of that trend. All right, form that M, it's going to continue to go down. So if we show the stop loss take profit of the double top, let's show it. Entry, stop loss, take profit. All right, it's almost at that first take profit. So that's with double tops and double bottoms. That is basically candle patterns continued. Double tops, double bottoms. Okay, there are more, but let's talk about harmonic patterns. Okay, so let me take this off. All right, and let me put my visual up here. All right, let's bring this into the fold. All right, so very similar to the other candlestick patterns, you're gonna have your bullish and your bearish patterns. Okay, so you have the bullish butterfly, you have the bullish shark, the bullish Gartley, the bullish bat, the bullish 3-drive, the bullish cipher, bullish ABCD, bullish crab. Now we can manually look at this and form it, and again, we could do master classes on each of the things that I'm covering in detail, bringing it all the way to the point where you can measure harmonic patterns for yourself using Fibonacci tools, mixing it with Elliott waves. You could do it all manually together. You could do that. It will take a lot of time out of your trading journey, so it's better to just leverage the technology. But there are master classes that you could take on that. I could personally do it myself, but that would be too much, and the amount of the percentage of my audience that actually want to go through all the little technical stuff is very small. You know, my crowd is mostly straight to the point. But let's talk about it, okay? So you have butterfly, shark, Gartley, bat, crab, A, B, C, D, cipher, and 3-drive, okay? Now, and then you have the bearish versions of that, which is the exact opposite. So when I'm using the harmonicscanner.ai, you could go to harmonicscanner.ai for yourself or harmonicscanner.app. Okay, it's going to bring you straight to where you could have a free trial and actually use this. All right, so harmonicscanner.ai or harmonicscanner.app. Okay. All right, now, butterfly. Let's start with butterfly since this appears right over here. So this is a bullish butterfly because you see the green arrows up. All right, so let's show it. Okay, let's click on it to show it. All right. You also have the measurements that appear. All right, but look, this was detected. All right, here is the butterfly. See, it looks like a little butterfly with wings and all that. And I know the harmonic patterns is not, it doesn't look too different from each other at all, really. It's just the slight difference in some of the meaning points. But X, A, B, C, D patterns are harmonic patterns, basically. So as you can see over here, all right, here's the bearish candle, stopped right over here. X was marked right there. Here was the opening, okay? Here's A, top of the wick over here. B, bottom of this wick over here. C, top of this wick over here. And D, okay, right over here. All right? So this projected it probably in the middle of this candle because obviously the candle didn't close here. So it would be more like this. See where the wick is at. Here's the actual low. It's pretty lopsided. But this support was detected. So this is probably based on a support previously. Sometime in the past. Yeah, that was a support level that was marked a while back. Okay. Okay, but yeah, so this right here is a butterfly. Let's go and let's look at the bat. All right, this was a much longer, stronger one. Looking at this in the 1 hour. So it looks like this one is still forming. Once it gets to this point, this officially forms a full-on bat. So as you can see, it doesn't look too different from the butterfly, right? It really is not much of a difference, really, because harmonic patterns, they're just slightly different. And that slight difference gives it a different name. Functionality is the same, though. So this is a bat. And basically, from what I can tell over here, this is based on, remember that double top? Let's look at that double top, okay? Look, so this double top formed, which is a part of the bat that's currently forming right now. But because of that double top, it's showing, and once it gets to this point, the full-on bat pattern has shown itself, right? And if we look at let's take out the double top, and let's take out the butterfly for now. Okay, here we go. So when we show the entry, stop loss, and take profit for the bat, this is what is determining right over here. So when the market finally gets over here, which is the take profit for the double top pattern, all right, most likely this is detecting it's going to reverse. So the bat is showing reverse. Usually harmonic scanners are to detect potential reversals, okay? Yeah, this definitely looks like a harmonic pattern, but it was just off a little bit. Let's click the butterfly again. I believe it was misdirected. This should have been right here. Definitely looks like well, kind of looks like could have been a reverse head and shoulders forming there before, but as we can see over here, that double top that formed, all right, when that hits take profit, this bat pattern will be completed, and then a reversal is basically expected. Okay, so let's take this out of the picture, hide this. Okay, and butterfly, bat. Let's see, do we have a Gartley? No, we got a shark. Okay, so let's show the shark. All right, this is the shark pattern right over here. So slight differences with the looks of these harmonic patterns. Very slight. X, A, B, C, D patterns, basically. So this shark is not completed, but when it does, it's going to hit that D point, and a reversal is expected. So it's expecting for this to drop again. So if we look at the price points, this would be the entry, stop loss, and take profit price points right over here for the shark pattern. All right, let's go into the monitor in here, which is really dope because we can then take a look at what else is out there. So we haven't seen the Gartley yet. We saw the butterfly, we saw the bat, we saw the shark. We didn't see the Gartley yet. Let's see what appears. Here's some exotic pairs over here. USD Mexican peso. All right, so this is an exotic pair, USD MXN. And here is the Gartley. So again, just slight differences with the XABCD pattern. But here is how the Gartley pattern looks like. All right. Again, harmonic patterns are basically reversal indications. Okay, so when the market continues, when it fully forms, which it did right over here, this would be the entry. A reversal is expected to go back up right over here. This is actually a great signal for me to put out right now because I can verify it. The pattern is fully formed. I can verify this. But the thing is, with exotic pairs, it's extremely volatile. And so, you know, exotic pairs move by thousands of pips, like in a day or two. It's crazy. It's insane. It's super risky. But, you know, if you're a little more advanced, then you'll love it, right? So it's one of those things. It's quite a thrill. All right, so we covered butterfly, shark, Gartley, bat. Let's look at what other ones we got. So what's next? Cipher, crab, ABCD, and 3 drive. Let's see if we can. Here's a crab on another exotic pair. Here's a deep crab on USD CAD, which is familiar. It's one of the major pairs. Let's take a look. Ooh, this is great as well. So USD MXN, USD CAD right now. Good buys right now, in my opinion, from what I could see. Right over here. But yeah, so this is a deep crab. Okay. XABCD patterns. And look, we could utilize a couple of different things on it. We could go over it with Elliott waves. We could go over with Fibonacci, all that good stuff. But just get familiar with the patterns and just understand they're all reversal patterns. It's not too, you know, there's not too much of a difference between the harmonic patterns. They're all XABCD patterns for the most part. All right, let's see if we can find. The other ones ain't too common. But what I love about this scanner is that it also scans for just regular candlestick patterns like head and shoulders. Okay. And this is corn. All right, here's a commodity on the 4-hour. This is corn. And I will let you know the status of each of these patterns, if it's a completed pattern or not. So again, this is, you know, more advanced than probably some of the company programs that you've seen out there. ABCD, we haven't seen yet. And we haven't seen the 3 drive. But honestly, you know, the 3 drive really, it's as I'm looking at it right over here, this is basically a head and shoulders for the most part. The bullish or bearish ABCD, kind of the same thing. It could be taken as a head and shoulders. But basically, the market moves in impulses and zigzags and all that good stuff. So looking at USD Mexican and USD CAD, buy. Looking at corn right now, sell. I mean, you know, this will show you stuff that the naked eye cannot show you. So while most retail traders are really relying on support and resistance to basically trade, or using indicators such as Bollinger Bands only, yes, you can get by with the super basics. But the more you have in your arsenal, the more you can look for opportunities that not everyone else sees. So the problem is when you are taking advantage of opportunities that everyone else sees, you're prone to get taken out of the game by institutional traders that are using smart money concepts, all right, to gain liquidity, right? They can look at the order blocks. They know where a lot of the orders are going to be coming in from, and they can literally just stop hunt you out. So if you're looking for opportunities that every other person is looking for, i.e. support and resistance points, Bollinger Band points, typical stuff, that's exactly what the institutions are looking to steal from. So when you can identify opportunities utilizing drawing tools, more advanced drawing tools, identify opportunities using some of the stuff I showed you between this lesson and yesterday's lesson, then you can maintain a pretty good winning percentage. And overall, the idea is to utilize these tools to get in and get out of the market with the bag. That's it, point blank, period. So this was a long lesson, but I was covering some advanced stuff. And the thing is, I wasn't even deep diving. All right, because trust me, if we started deep diving on harmonics, if we started deep diving on candlestick patterns, if we started deep diving on pitchforks, deep diving on the stuff I covered yesterday, Fibonacci, Ganfan, Elliott waves, each of these could be master classes that would be 3 hours, 4 hours each long. But the important thing is that I'm at least giving you the gist of what you need to know and how you can leverage certain technologies to make it more easier for you to do your job as a day trader, right? We could cover so much ground, but I think we're good. We covered a lot of this stuff. If you want to use the Harmonic Scanner AI, just go to harmonicscanner.ai, all right, and start the free trial for the silver membership. It's $25. It's not even crazy. There's some companies that will charge you $500 to $1,000. There are independent developers that were hot 10 years ago that still think that people are willing to pay thousands of dollars for a very simplified harmonic scanner. It's everywhere, right? Like I could go over to MetaTrader right now. Let me just show you. Let me show you guys because, I'm sitting on some stuff. Let's go on over here. And I only used this for really indicators and tools. I don't have any account connected to MetaTrader because I use a U.S. regulated broker for Forex. And U.S. regulated Forex brokers are no longer using MetaTrader anymore. And I think it's because MetaTrader is made in Russia. There's a lot of politics behind it, especially in the world of trading. So let's take a look. Let me bring this down. Bring this down. All right. So I'll give you guys some of these visuals. Did we get it up? Okay. I was worried for a second. I'm like, yo, what's going on? All right, so I have different, tools, indicators, and all that, and I'm using, automated tools as well. And I will tell you that although these are extremely useful, it is not as good as the Harmonic Scanner.ai. It really isn't. So I'm gonna let this load up, and you'll see for yourself. I have harmonics put up on this as well. Remind me later. All right, so as you can see, I have my own harmonic scanners, put up on here. Okay, and it's pretty proficient, it's pretty good, but I mean, MetaTrade is kind of slow. You know what I'm saying? Like it's pretty slow. It's like it's just not it. But when I'm using harmonicscanner.ai, then that's a different ball game. I mean, the smoothness of it, the technology behind it, the notifications I could get, the ease of use charts powered by TradingView. It's just next level. MetaTrader, to me, it feels like early 2000s, like 2002 type of tech. It's a little annoying. I can't really. It's too much. It's not nearly as smooth, not nearly as flexible, and that annoys me. So I have different systems using different tools and whatnot, but go to harmonicscanner.ai. It's a fire tool to use, and to get our signals. I've told you guys what to do. You can simply just go over to mineonbillions.pro, hover your mouse on binary effects, and go right over here to Telegram to get our trade ideas for $50 a month. Just already off the top of my head, USD CAD buy, USD MXN buy, Corn USD sell. I already have it right here, right on top of my head. Right? So when you utilize these tools, you don't need to wait for someone to give you a signal. Of course, it's helpful, right? But it's good to have multiple services, multiple directions. So you can subscribe to my signals for $50 a month. Use the harmonicscanner.ai tool for $25 a month. You start with a 7-day free trial. If you don't like it, don't even buy it. But basically, for less than $100, you can have exactly what you need to find opportunities for yourself in the market and to get a good heads up as to what the market may be doing. Just understand trading involves risk, including some of all your initial investment. If someone gave, because I have friends and stuff, and we confirm each other's analysis. And let's say if someone gave me a trade idea to look at to confirm the analysis of it. Well, the way how I look at it is like, okay, let me look into this. Oh, okay, I see what this person was doing. All right, stop loss here, take profit here. And I'll plug in the same numbers probably, right, if I agree with that analysis. But I won't necessarily use the same exact stop loss to take profit. And the reason why is because there are institutions out there that can see where everyone's stop losses is at, where everyone's take profits is at, right? So my goal would be if I'm in profits and I'm happy with this trade, with this individual's trade profits, I'll just manually pull it out. And I'll do the same thing with each and every trade idea. So never take trade ideas directly as an absolute thing. Look at it as, hey, planting a seed. I'm planting an idea. Take a look at this. This is what it may do. It may hit this level. At the worst, it'll hit the stop loss. But at the best, it'll most likely hit profits right over here. That's the peak. That's the peak. But remember, there are institutions out there that can see where your take profits and stop losses are. They can see the volume of all the orders coming in. So you kind of have to understand that trading is basically a money heist. Treat it like a money heist. The goal is to get in and get out. The goal is to get in and get out before the house comes in and wins. Right? I hope that was as good of a summary as I could possibly, do for you. But that's basically that. So now that we covered the things that we covered, all right, what we're going to be covering on next week's lessons, at least the first lesson of the week on Monday, is we'll now be able to go over indicators. So we'll do the basic indicators, and then we'll go into the advanced indicators on the next lessons after that. And then it'll get to a point, y'all, where we'll start getting to more market psychology. And from there, at this point, it's just repetition. Repetition is the mother of all skills, the father of all learning. Getting in that experience, staying consistent. So now when you're looking at these harmonic patterns on the harmonicscanner.ai, if you go to harmonicscanner.ai, and when you're getting the signals that you're getting on the Telegram, now we're already at this level where now I'm sharing ideas, you're looking at these ideas, you're looking at charts, you're looking at these opportunities, and now it's just straight, let's get to the bag. All right, enough talk, enough learning, because we can learn forever. There's always something new to learn, but as long as I could go through what you need to know and even cover some of the advanced stuff that you should know, right? Or you should want to at least get to know, then we go straight into getting to the bag, which is at the end of the day what everyone wants. But there's so much more than just that. Some people skip all of this stuff and they go straight into trying to plug into a live session without understanding what's going on, right? I don't want you to be a dependent trader. I want you to become an independent trader. And as long as you can understand the charts and the drawing tools and the indicators, do you know what? Do you know what's so awesome? What's so awesome is you could transfer your analysis skills to executing other types of trades outside of Forex. That's the beauty of it. So we're going to get through all the learning stuff first because it's important. And then we're going to focus on getting to the bag. If you missed out on these lessons, catch the replays. I'm going to have it on the guides. So when you are a part of our Forex, our Facebook group, you're going to see it on the guides. Go to guides right over here. All right. And all these lessons that are being recorded, it's going to be here in the guides. So when you come into the group, we'll just simply say, go to the guides. This is also on YouTube. All right. So I'm running this on YouTube Live. I got this on the Telegram Live, all that good stuff. But the Facebook group is more of a controlled environment. There's no spammers there. It's more of a focus group for the most part. So keep in mind. Listen, these systems are going to work overtime. There's going to be signals upon signals upon signals. Look, I just got a couple of signals myself, and so what I have to do, go and verify them. If I can confirm these analysis, then I'll give it a thumbs up. Okay? Very simple. This does not have to be rocket science, y'all. All right? So look, I had fun doing this. I have fun doing this lesson, and I know it's probably going to be the most important lesson to date before we get into all the other stuff. So with that said, ladies and gentlemen, stay blessed, take care, and I'll see you on our next sessions next week. Peace.